What's up, everybody? This is Austin Lieberman. I'm building a $1 million portfolio right here publicly on YouTube and sharing every step of the journey. Today, AMD reported earnings. They had 71% revenue growth. The stock's up like 9%, or it was last time I checked. The Fed released FOMC minutes, and the stock market was down leading into the meeting and then down after the meeting, and now things are just going nuts. My portfolio is up something like 3% today, so we'll do an update there. And we're going to do a preview of Twilio's earnings, which I own Twilio in the $10K to $1 million portfolio. Each week, I do subscriber requested reviews of stocks that y'all request in the comments. So let me know down in the comments if you've got a stock you want me to review this week. First, let's jump into the portfolio. You've seen it before. If you're new to the channel, just go to the 10K to $1 million playlist where I put all of these portfolio updates, sharing everything transparently. Current value is almost $41,000. We've put in about 42,000, and if you've seen the channel recently, we were down a lot. Now we're only down about $1,200, and on the day we're actually up 4.3%, which is pretty crazy the way things are going. No idea if that sticks, goes away, everything goes back and crashes tomorrow, and don't care. I'm building this portfolio over 10 years and adding money over time. Largest position, still Amazon, $8,000. I added to GitLab today, put $1,000 more into GitLab. It's a $6,200 position. Added to Snowflake as well today. It's a $5,300 position. Tesla is a $4,500 position. And CrowdStrike rounds up the top 5 at $3,300. Scroll down real quick so you could take a look. Pause the video if you want to take a look at the other positions, but won't go into them position by position. I will show Twilio, which reports today, is about a $1,000 position. And then Datadog reports tomorrow morning. It's a $1,500 position. I'll cover earnings. Shopify reports tomorrow morning, $1,800. Pause the video and check out the rest of the positions if you want to. Let's jump into AMD's earnings. This was a fantastic quarter. It's a fantastic company. I don't own the stock, and I'll share why in just a minute. The top line, so the revenue growth was 71%. Keep in mind that includes the acquisition of Xilinx, however you pronounce it. And I think without that acquisition, organic revenue growth was 51%, which is still pretty fantastic. It might be off by a percent or two doing that off the top of my head. And their gross margin grew 2 percentage points. On a non-GAAP basis, gross margin was 53%. Operating income was $1.8 billion. Net income was $1.6 billion. And diluted earnings per share was $1.13. So non-GAAP is adjusted. And so the company beat consensus expectations for revenue and for earnings. They also upped their revenue and earnings guidance. I'm not sure about earnings, but know for sure they upped revenue guidance for next quarter and the full year. And so the stock is up about 9%. Real quick, we'll cover the product portfolio for AMD. And the big thing here is just that the company is expanding. They're expanding their use cases. They used to really just be known for gaming, but now they are growing very fast in the data center. They sell to clients, and those are processors, ultra-thin processors for commercial and gaming notebooks, and even gaming and workstation computers, which who uses those anymore? Not just laptops. But then top to bottom, graphics cards and gaming consoles, and then they've got embedded CPUs and chips as well. Here's their quarterly summary. We talked about it. Revenue up 71% year over year, 22% quarter over quarter, pretty strong. The key here, and the thing that I'm paying attention to with AMD, even though I don't own shares, is that they seemed to do well in this supply chain restricted environment. It's not showing any slowdown whatsoever in the data center and even in gaming. And so, in my opinion, that's good for the types of stocks that I own. And we saw good results from the public cloud providers in their cloud segments, AWS, Microsoft with Azure, and then Google with Google Cloud Platform. And so to continue to see strong results from companies that are suppliers essentially to data centers is good, in my opinion. $995 million of operating cash, record free cash flow, $924 million, cash equivalents and short-term investments of $6.5 billion, and they repurchased $1.9 billion in stock, and they have $8.3 billion in their remaining authorization to continue buying back more shares, which is a pretty good chunk. Okay, and here's the last segment we'll cover, which is their enterprise, embedded, and semi-custom segment. They had record revenue of $2.5 billion, which is up 88%. That is really strong, very strong operating income. And then we'll cover their strategic highlights down here. This is the key I want to focus on. Hyperscalers continue to expand internal infrastructure with AMD EPYC processors. 70 new AMD powered cloud instances. And they also launched from Alibaba, Amazon, Microsoft Azure, Google, and others. So strong all around, strong from the enterprise. All right, again, on this channel, this is a channel where I'm just showing my real portfolio and my own research. These are my own decisions. This is just information, not advice. But I like to show the application, not just, talking about these stocks, but thinking through why I own them or why I don't. So why do I not own AMD? I think it's a fantastic company. Again, covered their revenue growth here in this tweet. You can follow me on Twitter at Lieberman Austin. Why don't I own shares? So based on the consensus estimate, if it maintains its current price earnings multiple through 2026, which the current price earnings multiple, you probably can't read this slide. Check out my Twitter if you want to. The blended price to earnings multiple, according to Fast Graphs, is around 28. So if it kept that blended price to earnings multiple through 2026, based on current analyst estimates, the annual rate of return would be 17%, which is pretty awesome. And if I was confident in that, I would probably own shares because that's a pretty strong rate of return. In 2026, AMD's consensus earnings per share growth expectation is 15%. So they're expected to grow earnings per share 15% in 2026 with around 55% gross margin if they hit their consensus estimate. At a price to earnings ratio of 22.5, you're looking at an 11.6 annualized rate of return from yesterday's price. So it's even less today because the stock went up. If it trades down to a price to earnings of 15, which is right about equal with the earnings growth rate, you're going to an annualized rate of return of 2.4%. So the bottom line is that I think it's a fantastic company. It is a little bit cyclical because they're a semiconductor company, essentially. But I just think it's expensive. And I think their earnings growth is expected to slow down. They'll probably be analyst expectations. And so by no means am I short the stock or anything like that. But I think there's better opportunities in the companies that I own, which for the most part are not as capital intensive. They have higher gross margin. They have the ability to have higher revenue per employee, and they have the ability to be more efficient over time because they sell things like software for the most part. There are some exceptions. And I think they're earlier in their growth stage than AMD. And I just think the upside potential is a little bit more in the stocks that I own. I'd rather own the things I own and add to those than add AMD, even though I think it's a fantastic company. Okay, real quick, a preview of Twilio, a stock that I own that reports earnings this afternoon. They'll probably have reported by the time this video comes out. Analysts are expecting their earnings per share to be minus 21 cents per share, revenue to be 769 million. The last quarter they reported was on February 9th. They beat EPS by 2 cents per share. They beat revenue by 73 million. And let's take a look at the stock. Yeah, Twilio stock, as you can see, has essentially been in free fall since February 2021. It had gotten up to a price of $435 per share and a price to sales ratio of 35, which is just crazy for its growth rate. It's off more than 50%, probably more than 60% from its highs, trading down to a price sales ratio of 6, which if we look over time, Twilio last traded down to a price to sales, a blended price sales ratio of 6 back in 2018. That was shortly after the company came public, and there was a lot of controversy around their relationship with Uber. Looks like so there was a lot of questions about the business back then. It got, frankly, out of hand. I think a price sales ratio of 35 is a little bit ridiculous, especially for a company with gross margin around 50%, was a little bit insane. But now trading down to a price sales ratio of 6, in my opinion, with a gross margin still, 46%. I think there's opportunity there. And again, I am long the stock. I own the stock in the portfolio. And so if we go to forecasting, analysts are expecting about 29% sales growth for the next 3 years on average. So 31% in 2022, 30%, and then 31% again in 2024. If we take this out to 2024, price sales ratio of 5.7, you're looking at an annualized rate of return of 27%. We just talked a little bit about AMD and why I don't own AMD. This is a perfect example of why. Twilio, in my opinion, is a fantastic company, still needs to prove the ability to be profitable and sustainable long term, but I think they'll get there. I think they have good management. I think they're in an important market. And just the upside from here, if they're able to maintain a very reasonable price to sales multiple of 5.78 for the next few years and hit analyst revenue expectations in the business tracks, you're looking at a very strong potential annualized rate of return. And so I'm happy with the shares I own. I'm not going to react irrationally no matter what happens after this quarter, unless something were to happen where I just lose complete faith in the business, which generally does not happen in one quarter. It would take multiple quarters. So we'll do a earnings update tomorrow. Like the video, subscribe to the channel, and again, let me know in the comments if you have a stock you want me to review. Really appreciate y'all being here. Take care of your mind, your body, and your money. Have a great day.